were in the first full week in the month of March, if you discount Friday, the 1st of March, and add that to the final week of February, so we just get our feet wet as we get into our market street this week. Of course, everyone is looking at the rally, the fixed income space. Last week, Nigeria's bonds, Naira bonds, were the best among emerging markets. Bonds across the world is the best local currency bond around the emerging markets globally last week. That was just the week after the week of President Buhari's re-elections announcement by the electoral body, INEC. So that's one big story. On the other side, we found the stock market melted down just very sluggishly, 2.12%, again, because there's a bit of a rebalancing at the end of the month by big-time investors in the market. All of that will come into play on the discussion we're going to have. Of course, then the currency had a very better part. The central bank continued to hold the gates of the FX market with those increasing intervention Friday. Last week, about $210 million US. But if you look at the portfolio inflows, nearly $4 billion US in 1 week. That's the biggest we've seen since January the 1st, 2019. All of this coming into the conversation about the message of the market on President Buhari's re-election. Adedayo Bakare is an investment analyst at Afrinvest, is joining us for this conversation, which takes a very quick look at this market. This is the first week we had. They were going to come into the second week. What's the behavior of the market? If you look at what the market was doing, a bit of a zigzag just before the elections, then on the announcement, the market went up, then came down a little bit on the equity side, but the fixed income was a lot more steady. So let's get this analyst thinking into what this will be. Adedayo Bakare is live to us from our studios at the Nigerian Stock Exchange, downtown Lagos. Adedayo, it's good to have you. Good morning. Welcome to the program.
Good morning.
Yeah, let's hit the ground running. What's the message of the market from the market on President Buhari's announcement of a re-election?
Okay, I mean, I think continuity is the message. Policy continuity is basically the message. So coming from the campaigns and the manifestos of the different candidates, the top two leading candidates, the market had, seen different policies, I mean, on the direction of the economy. While a candidate was more, pro-market in terms of business friendliness, President Buhari actually favors, continuing a bit more, having government involvement in several areas of the economy. Think about, infrastructure in terms of social investment and also in terms of development generally. So the message for the market is basically policy continuity. And upon the conclusion of the elections, you've started to see that since there's a bit more clarity on the, the direction of the economy, on the type of policies to expect, then we're starting to see, more increased activity in especially in the fixed income market.
Yes. Okay. So when we look at the market, equities markets is where folks always think that, well, the investors will react, have his first initial reaction when the election and of course who becomes the winner. But again, if you look at the fixed income, which is treasury bills, treasuries and bonds, you find that this market was relatively steady, as it were, up until the elections. Then it was rescheduled, then it was held. Then you saw that big rally at the fixed income space. What's your reading at Afrinvest?
Okay. For the fixed income market, if you're following our outlook for 2019, we've always held the position that yields are going to peak, around, towards when the elections are starting. That is for the presidential election, and we're going to see a massive, drop in yields upon the conclusion of the elections. And basically, that's what we saw last week. That was basically what played out. Now, this is because, when you think in terms of, ahead of the elections, there was a lot of uncertainty, and investors did not know what to expect, basically. So since the elections have concluded, there's a bit more clarity. President Buhari has won, and we know what to expect. Also, we tend to see that in the past, few weeks, CBN has kind of slowed his, mopping up of system liquidity in the system. So all these were, factors that came together that drove the bullish run we saw last year. Basically, foreign investors running due to more economic clarity and CBN taking a more relaxed, position towards mopping up liquidity. In the equities market, things are a bit not as according to expectation. Initially, we had expected that, upon the conclusion of the election and when there is clarity on the direction of the economy, we're going to see increased activity in the, equities market. But that has not been the case. Currently, we believe, investors are still digesting, the news and what the implication of a Buhari presidency means for the economy in terms of the growth potential of the economy over the, the medium term, that is in the next 4 years between 2019 and 2023. So upon, this week, upon the, end of all elections, and you're going to see the earnings season. So a lot of companies have started releasing their earnings results for full year 2018, and we believe we should see a better momentum in the equities market.
Okay, Adedayo Bakare, we want you to stand by. After the break, we want to extend this conversation a little bit more with you on some of the other aspects. Again, we'll still look at the FX play in both the equities and the fixed income. Then, of course, we want to ask you a few more questions about President Buhari's next 4 years. It's called the 4x4 economy. Stand by, investment research analyst from Afrinvest. We want to have you pitching into that conversation. 2 minutes, everyone. We're back. President Buhari's gotten his first 4, then he got in 4x4, and that equals 8. That'll be ending by the year 2023. We're looking at the economy. What should be the feature of his cabinet? Already, the president says, well, integrity will come first. But what about efficiency of his cabinet and his policies, as well as his actions? We analyze the president's thank you message, which is what you call the... Let's talk to Adedayo Bakare at our studios at the Stock Exchange. Adedayo, do you think some of the decisions moving forward will have impact on the market? What would the market want to see, perhaps on the areas of legislation and what have you, to help not just the equity side, but portfolio investment into bonds and treasury bills, and of course help the naira get a lot more stable? What would you want to see there as part of the tough times that lie ahead, and it will affect the marketplace?
Okay, absolutely. It's going to be a tough time between 2019 and 2023. The question we should be asking is the president ready to take the tough decisions needed to reboot growth in the economy? Now, for investors, basically, what they are looking forward to is a system of policies that are a bit more market-friendly. And I'm going to give some examples. So in terms of, say, the business environment, for instance, investors want to see that the government is a bit more friendly to investors. Cases of, high-handedness that we've seen in the past and the issues we saw, with MTN, those are confidence sapping, and I don't think investors look forward to this. And also in terms of the business environment reforms that were started in 2016, markets will expect that to continue. Fundamentally, the major challenge the President Buhari administration will have to confront in the next 4 years is the dire fiscal realities. So revenues are still very, very poor, and we see a situation where the expenditure continues to increase. So at current levels, our debt service cost is around over 60% of revenues collected annually. So obviously that is not sustainable. So how will the president try to manage this situation? How do we bring a bit more sanity to fiscal policies in Nigeria? In terms of other fiscal reforms, in terms of tax collection, how do we go about this in ways that do not affect the private sector, which is the engine of growth in the economy?
Okay, great one there, Adedayo. Adedayo, just a second, a quick one there. Let me just add this to add to what you discussing. Nigerian Breweries just reported its full year 2018 numbers, and new excise duties took 25 billion naira out of Nigerian breweries portfolio, which was paid to the government, aside the company's corporate income tax and what have you, 25 billion for excise duties. Now the finance minister says before the elections, toward late last year, there will be excise duties also for carbonated drinks, for those who produce soft drinks and things like that. If you look at 25 billion naira out of Nigerian breweries, that's quite a pile of cash. So you think business sector should be prepared for perhaps this excise duty, which will be expanded across board, and perhaps the VAT for consumers who will have to pay more for things that we consume?
Absolutely. I mean, the government is desperate for more revenues, and we see a situation where they will continue to implement policies that will ensure they collect more revenues. Now, the overall impact of all these taxes on businesses is that in a situation where the consumer goods market, for instance, is currently very competitive, and what that means is businesses could not pass on the cost to consumers in 2018, and although we're seeing that this is getting into unsustainable levels, and we might see a situation where businesses are transferring these taxes onto the consumers, and the implication is that consumers will continue to face more pressure, between 2019 to 2023. Now, we expect that this will continue on so many dimensions, and based on our views, we think the government should actually take a more relaxed approach to its tax collection, because in the end, we need the private sector to grow. It is when the private sector grows that they deliver jobs, and we see a reduction in poverty levels, a reduction in unemployment levels. So overall, we think the government should take a bit more long-term view of growth rather than short-term benefits, which is immediate tax collections. We believe there are various ways to fund, say for instance, the infrastructure drive of the government, for which government wants to continue to collect revenues, bringing the private sector, incentivizing the private sector, which has a larger capital pool, to take on more of these projects, may be a bit more smarter than just trying to drive aggressive tax increases, which would deflate the economy further. Overall, we think there are tough choices, tough decisions from the oil and gas market. What do we do about the PIB? How fast are we able to implement it? Then you go into the downstream sector of the economy. Will price controls continue? This will continue to affect downstream players in the market. Then you move further to the power sector. What is going on in the power sector? The illiquidity from across the value chain. How do we resolve this? Are we to expect further adjustments in electricity pricing? I think these are the tough decisions that have to be made. It's going to be a tragedy if consumers or the general populace continue to endure tough times, and we are not making the tough decisions needed to improve our development over the long term.
Okay, Paul.